Hello, welcome to the European Open briefing for Monday, January the 15th. I'm Rafi Barajan, currency analyst at XM.com, and we're going to be having a look at the latest developments in the currency markets today. So the US dollar continues to struggle this morning. Last week, although it did climb at the start of the week, it ended the week on a fairly negative note, with the euro and the pound surging ahead to fresh highs. The dollar index continues to remain under pressure today, both against the euro, the pound, and also the yen. We had some comments from Bank of Japan Governor Haruki Kuroda earlier this morning. So there was a little bit of reaction to that, helping the yen strengthen somewhat. The weaker dollar is also helping commodities. We've seen gold prices at a 4-month high, and global stocks continued to break into record territory. So it's a bit strange that risk sentiment is high, even though gold prices are also climbing. And just to note that US markets will be closed today for Martin Luther King Day. But of course, the dollar is still pretty much at the forefront today. We can see those big falls late last week in both the dollar index and the dollar yen. Dollar yen hit a 4-month low of 110.57 a short while ago. The dollar index is at a 3-year low of hitting as low as 90.62. So we haven't really seen much of a change in US economic fundamentals, but what's driving the dollar lower is mainly what's happening with other economies, mainly Europe and Japan, and also you can also add the UK and Canada there as well, as they are moving towards, or appearing to move towards, tightening policy as they catch up with the Fed in terms of ending their crisis era monetary stimulus. There are also some concerns about a possible government shutdown, as on Friday it's the deadline for Congress to approve a new spending bill. At the moment there seems to be a big disagreement over migration, so that is somewhat weighing on the dollar as well. Earlier today we had Bank of Japan Governor Haruki Kuroda, although he reiterated his stance on maintaining monetary stimulus until inflation has hit the 2% target. He was more upbeat about the economy and on inflation. He said that underlying inflation is currently around 1%, which compared to his last remarks a few months ago where he said that underlying inflation is around 0%. So that's significant shift there in his language. Also, there was a Bank of Japan quarterly report on the economy, which painted its most optimistic picture since 2007. So all of that has raised speculation that the Bank of Japan could also join the ECB in announcing scaling back of asset purchases. Let's look at what's happening to the euro now. We can see those big gains last week. On Friday, it broke about the 1.21 level. It broke about the 1.22 level this morning, hitting a 3-year high of 1.2240. Of course, on Thursday, the euro was boosted by the ECB's meeting minutes, where the majority of policymakers were in favor of shifting forward guidance to focus more on interest rates rather than asset purchases. That led to speculation that the ECB could perhaps raise rates as early as late this year as opposed to 2019. Although Bundesbank President Jens Weidmann did attempt to play down the possibility of near-term rise in interest rate, he said that the chances are very small at the moment, although he did say that he does want to see an end date being announced for QE. So overall, that didn't have much lasting effect on the euro, and the euro remains very bullish this morning, and so does the pound. We can see sterling has hit its highest since the Brexit vote. It's currently at a 1.5-year high, about 1.37. It reached as high as 1.3767 earlier today. The reason why pound was going up, its gains started last week mainly on the back of the weaker dollar, but then on Friday we did hear reports that Spain and the Netherlands are apparently working together to achieve a Brexit deal that would keep the UK as close to the EU as possible. And so not only that, that's soft Brexit is positive for the markets, but also it does suggest that the EU isn't as united as it appears to be in its approach to Brexit. So that all of that has increased the chances that the UK will be able to get a good deal. Although the Dutch Foreign Minister did deny those reports, but traders ignored that. The pound continued to climb after that. But if we don't get any positive developments in the near future, we could see a sharp downside correction to those gains. So those gains mainly seem to be driven by speculation. So downside correction, so the pound remains very much vulnerable. We've got UK inflation and retail sales numbers later this week, so both could play a role in terms of whether or not the pound will be able to hold on to its gains. Let's look at commodity-linked currencies now. We can see all three major commodity currencies, the Aussie, the Kiwi, and the Loonie, are doing well this morning. The Aussie and the Kiwi are at 4 months highs. The Aussie hit 0.9960 versus the US dollar. The Kiwi hit 0.7288, and so that's again mainly on the back of the weaker dollar and as rising commodity prices. We're gonna have some Australian job numbers and Chinese GDP numbers for fourth quarter out of China later this week. So all of that will be very important. Particularly for the Aussie, which is very much dependent on Chinese trade. And looking at the Loonie, we've got the Bank of Canada meeting on Wednesday. Those gains on speculation that the Bank of Canada is on course on raising rates again in January, those gains were somewhat paired since we can see late towards the late of the first week of January till early last week, mainly on NAFTA concerns. So we are now reading some reports that President Trump is softening his stance on NAFTA. That did help the Loonie rise back up again a little bit. We can see its USD CAD has fallen below the 1.25 level. Sort of factors influencing Loonie at the moment, but the main near-term focus will be the Bank of Canada meeting. And finally, moving on to commodities, we can see gold prices are doing rather well. We can see those gains in the past couple of weeks. It hit a 4 months high, $1,344.44 an ounce, mainly being boosted by the weakening dollar. And oil prices, we can see, if we look at Brent prices, they hit $70 an ounce for the first time in 3 years last week. Brent is testing that key level again this morning, but does appear to be losing some momentum in the near future. On Friday, we had the US oil rig count, which showed a surprise jump in number of rigs, the active rigs from by 10 rigs to 752. And again, that's a reminder that as oil prices go up, it's going to attract more producers into the market, meaning we could see a downside correction. Especially the fact that the supply cuts are rather limited, even though we are seeing tighter market and inventories declining. US output is going up, but for now, oil prices remain very much supported near their current levels. We don't have any major releases later today, so that's it from me. Thank you very much for watching and have a great day.